This is an interesting chart. This is the average rate for small businesses. This is a real rate. So this is the interest rate minus inflation for small businesses. And really, this is useful to you as a dealer two ways. One, this is what your pickup truck buyers and your Sprinter van buyer is dealing with every day in their business. So one, when you trot out a wider interest rate for them, they're kind of used to it because they're seeing it everywhere. But two, this has been a real pain for them to deal with. And we're at levels, this is again, the interest rate minus inflation, we're at levels where we were at the beginning of the '08 financial crisis. So the small business owner is kind of squealing about credit conditions and about the interest rates that they have to pay everywhere. And it's affecting their business decision making.
Actually, a couple of fun facts here. Right now, August of 24 and September of 07 are highlighted here. Well, just a couple of fun facts. On September 18th in 2007, that was the same day that the Fed first cut rates starting in 2007. Next week, the Fed will likely cut rates for the first time this cycle, also on September 18th. And as you can see that these charts are very similar. Well, if we broaden that to, for example, the S&P 500, in 2007, the S&P made a summer high on July 16th, and in 2024, the S&P also made a summer high on July 16th of this current year. So it is absolutely absurd how similar this year is compared to 2007.
We didn't do it. It's not us. We are reporters. Okay, we are reporters. One of us is an economist, the rest are reporters. Carry on.
This is an interesting chart. This is the National Federation of Independent Businesses. This is essentially the bottom half of business size in the US. And this is their index of loan availability in black, and next to the inverse of jobless claims. So we've taken the jobless claim series and we've flipped it over. And what we've got here is we're starting to see labor market weakness, and banks are going to react like they always do with the small businesses. And there's a possible loan tightening going on. We're watching this graph very closely because small businesses are probably the most important part of the economy in terms of growth.
I think that this is a really good example of there not being current parity throughout the market. And you can see that disconnect that really hasn't occurred that much dating all the way back to 1986. But now you can see as small business loan availability has started to fall, jobless claims have not. And so again, we're under the assumption that there's going to be more parity in the coming months, and these graphs should start to align a bit more.